What's going on, guys? So we're going to break down the weekly prep. This is going to be a very big week. We got four rate decisions this week, okay? We got the Federal Reserve December 10th. We got the Reserve Bank of Australia December 9th. And we got the Bank of Canada that's going to be December 10th as well. And the Swiss National Bank is going to be December 11th. We also got labor data for the U.S., which is ADP employment. And we also got job openings, which is a good signal, right? To see the health of the U.S. labor markets. And then on the 16th of December, this is where we're going to get the NFP numbers, okay? And we're going to get the previous print. So after the rate decision, we're definitely going to see those job numbers, which could really set the tone leaning into next year, okay? So just starting off when it comes to the Federal Reserve, right? So their rate decision is going to be on the 10th. So there's already a higher probability that they're going to pause rates. It's already at 85% chance of a cut for this meeting. The Federal Reserve don't really like surprising the markets. All right. So it's more likely that they're going to give us a cut by 25 basis points. It's a higher probability with that. They're not like the Swiss National Bank, right? So even if they're not on the edge of that, they don't want to cause unnecessary volatility. So expect a cut is already expected. So that means if they do cut by 25 basis points, it's not going to really cause a big impact because it's already expected. But moving forward, we could see that they're most likely next year, they're going to cut rates. It's a higher probability to cut rates twice. But what makes this rate decision extremely important, right? Because for the economic projections, they release this about 4 times a year. So it's always on March, June, September, and December. Okay. And they give us the forecast of where they expect future GDP and future inflation, right? Future growth, those numbers. And they also give us the famous dot plot, right? So this is what we're going to be focusing on for this rate decision. And then also on Jerome Powell's comments. But the dot plot, for those that don't know, like each dot signals where each Fed member expects interest rates to go by the end of that year. So we're going to see 2026, 27, 28, like that, and so on and so on. If the dots are moving lower more than it did in the previous dot plot, right? So if this December's dot plot, the more Fed members vote for more cuts than they did in September, that could lead to more of a dovish reaction where we will see more of a weaker dollar and stronger equities. They're looking to cut rates more. If we see that the dot plot is a little more up, that would increase the odds that they're not likely to cut interest rates next year. So that could cause a hawkish reaction. So that's why this is really important to pay attention to. Then also Jerome Powell, right? After we get those numbers, he's going to have a press conference. So the entire markets is going to be focusing on the tone of Jerome Powell. Is he going to be more, is he going to signal more cuts in the future, or is he not? Based off his comments, where he thinks inflation is going to go and growth and et cetera. So this is what we focus on live together. All right. So I want you guys to know also the private members. I finished the whole macro fundamentals course. Okay. So you guys have access to this now. So it's going to be extremely good. I already finished all 10 modules. I got 2 more to go. I'm going to do them tomorrow, but you got the PDF lessons for them here. So if you want to read through them yourself, but like right now, I'm still holding trades on AUD USD, right? So I'm holding it because of everything that I teach here about how the central banks, how hedge funds are able to hold positions long term from like 3 to 6 months in advance, and how you could trade a weaker central bank against a stronger central bank. So you're able to understand that divergence and trade from a macro perspective. So like everything you want to learn here, right? The economy as a machine, how money and credit cycles drive the markets. Like you're going to be learning about business and debt cycles where we deal with the boom, the bubble, and the bust, right? Growth And in inflation, good growth versus bad growth. You're going to be learning about central banks and interest rates, right? From a macro perspective. So you guys have to remember, this is from a macro perspective, okay? So you're going to look at how economies, rates, and risk assets move the Forex markets. And this is also beginner friendly, just to show you guys. You're going to learn how the markets are able to identify recessionary fears. What are the signals for recession? Also, I break down how to read economic data like a macro pro. You're going to be seeing how to actually implement actual fundamental and trade ideas, how to put them all together. So everything is here. Okay. And even in the previous courses, fundamentals plus technicals, like you could just see how long these things are. It's like you got all of this information: trading plans, risk management, technical, central bank policies, market sentiment, intermarket analysis, geopolitical tensions. You got everything that you need here. And plus also beginners, friendlies, what is Forex and stuff like that. So there's no excuse, guys. You got all the information here. Hopefully you guys enjoy it. Take notes, right? And just let me know how it goes. You know, definitely if you need helps, let me know. If you guys don't want to, when you join the private group, you get access to this. Okay. So when you join the private group, you get access to the course as well, and everything is included. If you guys just want the course by itself and no access to the group, then just link is in the bio so you could just take advantage of it. Okay, guys. So now moving forward, we could just see that the Federal Reserve, the bias is over 50%. So the Federal Reserve is more neutral / dovish because economic data has been decelerating once the government shutdown ended. We've been seeing that growth data has been pushing lower. Labor data has been pushing lower. So those odds are showing that the Feds are more lenient to interest rate cuts. But the problem was right after the last rate decision, Jerome Powell did say that there is no probability. We don't know what we're going to do for December. It's not 100% guarantee we're going to cut. So then the probability of a hold was at like 70 to 80%. But then once the government shutdown and we started seeing the data, we've been getting hints that the labor markets is dropping. We've been seeing massive layoffs. So now the markets is again with a probability of a cut, right? So it's going to be pretty interesting to see this, but I'm definitely going to trade this live. So if you guys want to trade this live with me as well, join the private group. But this is going to be pretty fun. Okay. So we went over that. So the Reserve Bank of Australia is going to be on the 9th. Okay. A late Asian session, and Australia is dealing with the possibility of higher inflation. So this is why I'm still holding on AUD USD buys, because I got in 2 weeks ago because of higher inflation for Australia, higher growth. So all of this is making them concerned that inflation is still sticky. So they're not going to want to cut interest rates if they're concerned about inflation. So if they confirm that during the rate decision, it's just going to cause AUD to gain strength. But if they say that they're less worried about inflation, right, they're not concerned, they think inflation spike is just a one-off, then we're going to most likely see the AUD currency pushes lower. So it's going to be important to focus on the forward guidance for the Reserve Bank of Australia. Same thing for the Bank of Canada, right? Hawkish expectations if they're worried about inflation, right? Less rate cuts ahead. This is what's going to cause CAD strength, right? And more dovish reactions if they're worried about growth and they're expecting more rate cuts. This is what's going to cause more CAD weakness, right? So we're going to be focusing on that as well. This week, like I said earlier, we're going to have job openings most likely next year, because on the 16th we get NFP numbers, right, as well. So next year, hopefully, economic data is back to normal. So we could just focus on trading economic data normally. And that's my goal, right? So we got earnings this week, and nothing is major, but when you're looking at earnings, you're trying to get a determination, is growth still doing well for these companies? Because if growth is still doing good, there's no reason to sell the stock market yet. We can't just hear the recessionary fear get thrown out like that and we just start panic selling, because nothing is signaling that we're in a recession yet. So as long as earnings are still doing well, those are really good indicators to give us ideas that consumer spending is still high, businesses are still doing well. So these are little indicators that we could just focus on. Now, just to help you guys out, to look at the economic calendar. So we just had GDP for Japan But Monday, no major data for anything, but Asian session, we're going to get the Reserve Bank of Australia. So that's going to be at 10:30. We're going to trade that live. Tuesday, this is where we have job openings. That's going to be at 10. So you can see we're going to definitely focus on that. Wednesday, that's when we got the Bank of Canada's rate decision along with the Fed rate decision. As you can just see, the projections of the dot plot is there. Thursday, London session, we got the SMB rate decision. That's going to be at 3:30. And then on Friday, we're going to trade this live, the UK GDP data. So very important for us to trade this event before the actual rate decision comes out. So now we can look at possibilities of trade ideas, right? Because looking at the dollar, we could already tell that the dollar has been pushing bearish this whole entire time because they already knew that the Feds is going to have to cut rates eventually. So it's nothing new that this happens, okay? But what I want us to focus on is range. Because I like the idea of a weaker dollar, sometimes the markets could pre-sell before the day. They could look to pre-sell like before the event, right? If they're dovish, just watch out for these retest zones. It's a possibility if price could retest 99.0, right? We could see dollar just tap that zone and then push lower. If we see dollar break out higher and comes to like 99.2, then I will possibly be looking for sells for price to push lower as well. The safer sells is going to be below 98.75. If we break below that area of support, we're just going to see dollar weakness continue. So I like the dovish reaction. I think the Feds is going to be dovish. I feel like economic data is confirming that we're seeing slower growth, that the Fed should continuously cut interest rates, right? So it's a possibility we could see the markets act beforehand. So just watch these areas, set those alerts before, right? So if the dollar just start dropping out of nowhere, you know why, and you could take advantage of it. So if we do get a weaker dollar, right? If we do get a weaker dollar, what that would lead is to buys on GU. You will see GU start to push higher. We'll see EU push higher. And I'm still in AU, so if this pushes higher, more profits for me. All right, so as long as this support holds, right, in these zones, you're great. But if we see that the dollar does push higher and let those pullbacks happen, cool. Because it was set up for dollar weakness in the future. If we could see that the Feds continuously, if the FOMC is actually more dovish than expected, right? So we could talk about gold also, because I know a lot of you like trading gold over Asian session and also London. So we like just look at the range that we have for gold, right? Very, very choppy for a while. And we understand it's because we got the rate decision coming up. So if we see this range here, just focus on this range moving forward. So if we start seeing price break above 42.20, there's probably a higher probability we could see gold hit 22.40. Okay, hit that high. I would say take that scalp. I like the idea of a weaker dollar. If we get weaker yields and weaker dollar, take advantage of those gold buys. I think is a very good play. Okay, this is high risk. If we break above 42.12, it is a high risk buy. But if you want to take that scalp, so be it. You know, but I would rather look for the safer entry. So set those areas as an alert. If gold breaks below 4,200, like 41.96, the next target I could see hit is 41.76. Probably that could be a good range. That's if we see dollar is gaining strength, the yields are gaining strength, or if gold just starts breaking that support. I still like the idea of gold buys. So even if gold does break lower, and then if gold goes back into that range, back above 4,200, I think that could be a good high risk buy to see if prices push up higher. Okay, but to set those two areas as an alert moving forward, because we could see volatility probably throughout the London session, right? So I don't want you guys to miss out on those opportunities. We could see the markets preset before the rate decision. Now we can look at the equity markets, right? Pretty much everything is the same. NASDAQ, S&P, US 30. So if we see a dovish reaction, right? Because we could already see the stock market is already pushing higher. If they're anticipating rate cuts, right, they're expecting the Feds to be more dovish. This would increase the odds of NASDAQ and equity markets to push higher because this supports the direction. This helps the stock markets grow. I explain all of this in the course, okay? So just go over it, take your notes so it does help. If we see that NASDAQ go back into the range, Just let it consolidate, okay? Because I still like the idea of the stock market rising, and any buy opportunities that you could take advantage of for then, I would say that will most likely be the best bet until we get proven otherwise. All right, guys. So I hope this is helpful. Again, if you got any questions, just let me know in the comments. And also you can follow me on Instagram and ask me questions there. Have a good one.